Bitcoin falls to $69,000. The price of Bitcoin dropped to $69,000 amidst the release of mixed U.S. labor market data, triggering liquidations exceeding $400 million. The new economic indicators showed both positive and concerning signals for the U.S. economy. The number of non-farm payroll jobs increased to 272,000 in May, significantly higher than April's figure of 165,000 and the Dow Jones forecast of 190,000. However, the unemployment rate rose to 4% for the first time since January 2022. The job growth was particularly notable in healthcare, leisure, hospitality, and the public sector. Analysts consider this report strong, suggesting it could delay interest rate cuts. According to the CME FedWatch tool, futures indicate a 50.5% probability of rate cuts by September. Such uncertainty leads to increased volatility in the cryptocurrency market. Data from CoinGlass shows that the total liquidation volume over the past 24 hours reached $411.88 million, affecting nearly 148,000 traders. Long positions accounted for $360.41 million of the liquidations. Despite the recent decline, renowned analyst Marcus Thielen is confident in Bitcoin's positive trajectory. In his latest report, he highlights the potential for BTC to reach $83,000, driven by a head and shoulders pattern on the chart and supportive macroeconomic factors. Thielen emphasizes the cycle of monetary policy easing by global central banks, with recent rate cuts in Canada, Denmark, and Europe, and expected further easing in the U.S. due to weakening economic indicators. He explains that although the Federal Reserve historically avoids cutting rates between May and November before presidential elections, market sentiment and the perceived likelihood of rate cuts are crucial for risk assets like Bitcoin. The analyst also notes the potential impact of Ethereum, especially if its price drops sharply, and discusses the importance of money flow indicators. To reach the $83,000 target based on the head and shoulders pattern, we need to see an influx of $13 billion through various channels. That's what it takes. Breaking above the trendline at $71,600 will naturally lead to increased buying through numerous products, but $13 billion requires significant effort. However, we believe it is possible, as a weak U.S. labor market and lower inflation data next week are likely to create a macroeconomic backdrop for new all-time highs, he explained. Growing institutional investor interest further strengthens the long-term prospects of the leading cryptocurrency. Steady inflows into U.S. spot ETFs illustrate this trend. ETFs recorded inflows for 19 consecutive days, surpassing the previous record of 17 days. According to Soso Value data, the total amount as of June 7 was $15.69 billion. The dominant player remains BlackRock's iShares Trust with net assets of $21.07 billion.